Professor Indra Abeysekera. One of the learning goals in this workshop is for us to understand how to record dividends paid and declared by the company. The dividends are a distribution of profits to the owners or the shareholders. There are two types of dividends. One is the cash dividends, the other one is the share dividends. The cash dividends, to make cash dividends, the company should have sufficient retained profits. There also should be cash necessary to pay dividends. So those two conditions must be met to pay cash dividends. So when dividends are declared, that is the time the transaction should be recorded before payment. When it is declared and the dividends are declared by the company directors to the shareholders, either in a meeting or in writing, we credit dividend payable because that is something that has to be given away. And we debit retained earnings, that is going to decrease retained earnings. So part of the shareholders' equity is being given away, retained earnings. So that is given away, so part of the shareholders' equity decreases because that is taken out and given away for personal use to owners. When the cash is being paid, we decrease cash, credit cash, and debit dividends payable. Debit dividends payable. So the owners, the shareholders' equity decreases at the time the dividends are declared rather than at the time dividends are paid. So that's cash dividends. There are also another type of dividends called share dividends. Share dividends are paid in shares. So when we compare share dividends with cash dividends, we use, in both instances, we use retained earnings to pay dividends. But in cash dividends, cash is paid out. In share dividend, shares are issued, and that reduces the retained earnings. There are three types of share dividends. The first one is the bonus shares. Second one is the share split, and the third one is dividend reinvestment plans. Bonus shares are where the shareholders are issued with the proportional distribution of shares. That is, based on the ownership, that further shares are issued in proportion to that ownership. Share split is the existing shares are split either into 2, 3, or any number. Dividend reinvestment plan is where the shareholders choose to buy shares from, otherwise that becomes cash dividends. So there are the three types of share dividends. So there are two types. There are two ways of paying dividends. One is the cash dividend and the other is share dividends.